What the heck is happening with the Fed, what's happening with interest rates, and what's that going to mean to next year and what we see in the housing market. I want to talk about a new bridge loan that we've got coming out. I want to talk about some changes that the FCC has that they put in place that are going to take effect in 6 months that is going to change telemarketing, which means if you're a realtor, you want to listen in because it's going to change how you buy leads. If you are a consumer, it's going to change how you get information and how people connect with you. So you're going to want to hear about that. And then the final thing I'm going to talk about is some new products that we are rolling out effective today that are going to not necessarily be new to the industry, but new because we're controlling them in-house. And I want to explain to you what they are and what they mean and how that's going to impact you. So let's go ahead and get started. What happened? So first of all, let's rewind to last week. We had a jobs report. The jobs report started pointing towards, hey, maybe we can see a little bit of relief in interest rates, a little bit of a rocky reaction to the jobs report last Friday. And I had said last week, we're looking at what is inflation going to do, and that the inflation report and the Federal Reserve meeting this week was going to be critical. Well, the inflation report on Tuesday came in exactly where we expected it, which was a bit of neutral, yeah, but a little bit of a mixed reaction. And everybody was nervous. Hey, what's the Fed going to say on Wednesday? Because inflation and jobs have been the two critical things that the Fed's been paying attention to. And the Fed, from a week before, got news that, hey, jobs are actually a little bit better than what we had thought. And yet inflation came in exactly what we thought. And we want to see, the Fed has said they want to see jobs get worse. And they want to see inflation go down. And that was kind of what they were thinking was going to solve the problem. And there was a lot of speculation about, well, what's the Fed going to do on Wednesday? The Fed gave us an early Christmas gift on Wednesday. The Fed pretty much literally said, we're not raising interest rates anymore. Now, you might say, John, you've been telling us all along that the Fed doesn't control mortgage rates, but the direction the Fed is moving influences mortgage rates. And the Fed said, we've been raising rates for the last year and a half, and the mortgage market has responded. Now the Fed has said, we're done. We're done raising interest rates. Now, we're not talking about dropping interest rates yet, but we're done raising interest rates. And that's all it took for the mortgage market to respond. Was all they needed to hear was the Fed saying, we're done, and they said it. So we've seen interest rates improve pretty significantly in the last few days. We're now back into the high sixes for most people. Huge improvement over where we were just a month or a month and a half ago when we were at 8.5%. So it's the biggest drop we've seen in quite some time. It's going to be a volatile period from here going forward. But I firmly believe now that the worst is behind us. It's going to be rocky as we go down, but we are pointing in the right direction of interest rates going down. What's that going to mean to the market in 2024? It means exactly what I've been saying all along, that as rates come down, more buyers are going to come back into the market, and that's going to lead to price competition. It's going to make it harder for people to get their offer accepted on a home. Now, it's not going to be the influx of what we saw in 2020 and 2021 because there's still high interest rates, still high prices. It's still not affordable for a lot of people, but it's more affordable and it's psychologically a better market to buy, especially if you're looking to sell a home and buy a new home. And that's where our new bridge loan comes into play. This is an innovative product that I'm super, super excited about because it's going to help people who are in the situation where I'm just tired of the house that I'm living in. I want to move, but I didn't want to give up my 3% interest rate as rates were going up. And now that rates are starting to come back down, well, maybe I will give up my 3% interest rate because I'm going to at least be able to get the house my family really wants. And it really ultimately comes down to that. It comes down to what do you need to accomplish your family's goals? And there's a lot of pent-up demand of people who have wanted to make moves, but they didn't because there wasn't enough inventory out there or rates were moving up and they didn't want to be in a position where they put their house on the market when rates were at 6 and they got their house sold and then they go to buy the next house and rates are actually at 7 because rates have gone up. And that's been a major fear of people. And so when you sell a home and buy a home, you have 3 choices. You can sell first. Now you're a renter or you're renting back from the person you sold it to, and then you buy after. That's great because that makes you most attractive to the seller of the house you're trying to buy because you're not contingent. The second option is that you can be contingent on the sale of your home and you're trying to buy and sell at the exact same time. The problem is you're not as attractive to the seller because the seller says, well, what if something happens not just to your transaction, but what if something happens to your buyer's transaction? I'd rather go with just one domino instead of two. And so it's harder to get your offer accepted, especially in a competitive market. Your third option is you buy now and you sell later. The problem is all of your money for your down payment is tied up in the house that you own right now. And most people can't afford to make the monthly payment on two homes until they sell the house that they're currently living in. And so although buy now, sell later is for sure the best option to keep you in your home, not have to worry about moving twice, not having to worry about a bunch of people walking through your home and doing showings while you're living there, and worried about putting the kids away, putting the pets away, and cleaning up after the kids. So the buying now and selling later has always been the simplest from a lifestyle perspective, but the problem is it's the hardest from the financial perspective. Until now, we have an innovative bridge loan product that essentially will allow you to get a good chunk of money out of your current home, and the bridge loan will not require any monthly payments, and we will loan you money out of the bridge loan that will pay your monthly payment for your house payment on the house you're moving out of. So you get some money out of your current home to put down payment on the new one, and you make no monthly payments on the house that you are moving out of during the time that you're selling it, and you have 6 months to sell the house. And in the market we're going into, it's a great market to sell a home. Your home should sell very, very quickly. And the best part is that there's a guaranteed offer at the end. Now that offer is a lot lower than what you want to get, but in 6 months, if you don't get your house sold, then our program guarantees to buy your home at a certain price. And so it's the best of all of the worlds, and it also can give you some money to fix up your home. So if you're in a position where you're like, hey, I don't have the ability to sell my house at the top price because I need to do some work on it, the bridge loan will loan you money for the down payment and the closing costs on the new home. It'll loan you money to do some work on your current home. We can maybe even pay off some debt if necessary in order to qualify you for the new purchase. You buy the new home, and then you have 6 months to sell your current home. That's huge. It's a game changer. If you think you're going to want to buy a home and you currently own a home and you're thinking about buying in the next year, talk to me about this innovative bridge loan. I'm super, super, super excited about it. All right. So the FCC rules. Here's what's happening. The FCC just came out yesterday. They've been talking about this, but not yesterday. Today's Friday. They did it on Wednesday. And on Wednesday, they passed the final rule that basically says if you go onto a website and you say, hey, I'm interested in getting information about mortgage loans, or I'm interested in getting information about insurance, and you check the box that says contact me, what has in the past been the case is you end up getting 100 phone calls, because there's companies that put the advertisements out there, and they take the lead, they take your information, and they sell it to lots of other companies. And so you might say, hey, I'm interested in getting information about a mortgage. And you get 100 phone calls in 2 days from 100 different mortgage people, because that one company took your one approval to be contacted about a mortgage and sold it to 100 different companies. This is very, very common in the real estate world. A lot of realtors actually have built a lot of their client base from this and buying leads from what we call lead aggregators. So if you're a realtor, you need to be listening up. If you're a consumer, you need to understand how this works. Well, here's what changed. Effective 6 months from now, again, the rule is in place. The FCC has signed this final rule, but effective 6 months from now, when you opt in, you are opting in for one company to call you. And so how that's going to play out might be that there's going to be a multiple pick list that says, hey, I want to get information about mortgages. And then there'll be a box that pops up saying, hey, we've pre-selected all these 100 companies. Unselect them or click OK if you want to proceed. I'm sure they'll find a way to make it seem like you're like terms of service, right? We never read the terms of service, and you got to just scroll, and then click accept. So they're probably going to bury something in there, but they're going to make it harder for you to say yes to something once and get 100 phone calls. So that's good from the consumer perspective. It's going to be challenging from the corporate sales perspective. If you're a realtor and you're counting on leads from these companies, you got to start figuring out, how do I build relationships and find people in my local area that I can connect with? And you can do it via Facebook advertising. We're making a lot of progress towards building these things out to help our past clients, to help our realtors and referral partners to connect with and engage with consumers that are local to their market. That's a one-to-one connection. Instead of buying their information online, you're actually just reaching out to somebody and getting them to agree to do business with you. And there's lots of ways we can do that. But this is a big, big, big game changer for the industry. Lots of things happening right now in the industry, lots of changes happening, and I want to be a resource to keep on top of all of that. The final topic I want to talk about today, it's something called non-QM, or non-qualified mortgage lending. So non-QM is the things that don't qualify under the normal conventional guidelines. Fannie Mae, Freddie Mac, FHA, and VA, those are considered qualified mortgages. This term came out when the Dodd-Frank Financial Reform Bill passed in 2011. And they said, hey, if you meet all these criteria, you're a qualified mortgage. If you don't, then you're considered a non-qualified mortgage. And the lending institution has to have more skin in the game, because they can't just hand out these loans like they're popsicles, like they're candy, like they're suckers. I don't know what the analogy is. Anyway, so this industry has grown over the years. And what it has become is an industry that specifically focuses on a few categories. It focuses on people that have had recent credit events. Somebody who maybe had a bankruptcy or a foreclosure, and they have a big down payment that they want to put towards buying a home because maybe they got an inheritance after that bankruptcy or that foreclosure, but they don't qualify because of the guidelines. And so that would be an example of where we can use non-QM. A second area we can use it is people who are self-employed that don't report the full amount of their profits on their taxes. They've got a great CPA that finds legal loopholes to help you not pay as much money in taxes. And so there's programs where we can use your bank statements to show your income. There's programs where I can use just your 1099 and not have to see your tax returns, or I can use just your profit and loss statement and not have to see your tax returns. And so all of these programs are what we call non-qualified mortgages. And then the third category is people who are buying investment properties that either can't or don't want to have to jump through the hoops of proving all the rest of their income. And so those are called debt service coverage ratio loans, or DSCR. And what that means is that we only care about the loan and the house you're buying, and we care about the income and the expenses of that rental property. So you might have 22 properties, and some of them are rented and some of them are not. And your income doesn't show very well on your tax returns, but this one property we're doing a loan on, that property generates $6,000 a month in income. And your payment on there is only going to be $4,000 a month. Then you qualify automatically, because I don't have to worry about the rest of your income and the rest of your debt, because the income from that property is more than enough to pay the payments on that property. Now, we normally don't have that big of a gap. Normally it's, hey, the payment's $4,000 and the income's $4,000. Okay, you qualify. But that's a way to help people. Maybe they're doing a 1031 exchange to sell one commercial property for another one, and they're receiving rental income that more than covers the payment, and it's going to even put them in a better position, but they don't qualify right now because maybe they're in between jobs. And so they don't have income, but they do have income from this property, and by selling one and buying another one, it's going to generate even more income. You can even use this to pull cash out of investment properties. So there's some really, really innovative ways that we can use these programs. But here's the deal. Up until now, I've had very, very little control over the process. Up until now, I was a third party. I was what we call a broker, where I would send that to an outside company that we don't have control over. And it wasn't a very smooth process. And I didn't really talk about this a lot, because a big part of what I believe I provide is an amazing process that really guides you, and that when I say I'm going to be able to do something, I'm confident I can get it done. And I've got the ability within my company to pull strings. I've built a great reputation here. I do a lot of business, and so I can get things done and call people to make decisions quickly. I can't do that when I'm the broker. And so these non-QM loans are now being done in-house. Effective today, we are launching in-house non-QM loans. So we're growing this portfolio. There's a lot of products we're going to be adding over the coming months. You're going to hear more about it in the coming months, but I'm super, super, super excited about it, because here's the deal. There's a lot of people who maybe they don't want to move, but they want to renovate and pull some cash out of their current home in order to turn it into the house they really want, add that extra bedroom, but they just don't qualify using normal guidelines. we've got the ability now to help you out. We've got the ability now to do second mortgages and pull cash out of your home. And I can use your bank statements to prove your income to get that second mortgage if your tax returns don't work. So lots of options we have coming out. I'm super excited about 2024. Let's get started now. If you're in the position where you're thinking about buying a home, selling a home, upgrading the home that you're in and remodeling it, or pulling cash out for debt consolidation, reach out to me now, because this market is one that we've got to have conversations early and often to navigate these waters. All right, gang, I appreciate your time. Thanks for listening. Hope you have a wonderful week. We'll talk to you one more time before Christmas. And everybody, have a great weekend. Bye-bye.